Hi, this is John with pdftax.com. We're looking on the screen here at Form 1120S, the U.S. income tax return for S corporations. This PDF file that we're looking at was downloaded from irs.gov, so it is the official government form. However, it's been enhanced in several ways, as you can see. The most obvious one is these yellow navigation buttons. So for example, if I was to go over here and click on this one to go to 1125A, that's where it would take me. And then to get back to the page one, I could either scroll up all the way to page one, or I could just click on the navigation page button, which would take me to this navigation page. And then I can click on page one and I'm back where I started. Now the yellow buttons, they're visible on the screen, but if you print out the paper copy, they won't print on the paper copy. So if you wanted to file this form as your tax return, you could do that. So let's start out here to show you how this works with the business activity code. I'm going to go over to the instructions for this form 1120S, and again, these instructions can be found on irs.gov, and the one that I want is highlighted in yellow here for me, 722513. So I can enter that right here like that, and then I'm ready to put in some numbers for this business. We've created a hypothetical pizza restaurant, so let's go through this and we'll show you how this works. I'm going to use some nice round numbers here for my sales, $750,000. Now you can see that carries down automatically for you for your totals. So this is a self-calculating form. So let's enter some more numbers to continue here. Let's go back to the 1125A, which is the cost of goods sold. And cost of goods sold is the cost of all the things that are used in this business to make the pizza. For example, the dough and the cheese and the pepperoni and all the toppings, and whatever soft drinks are sold during the year, those would all be part of inventory cost. And the first thing we're going to enter is the beginning inventory, $80,000. Beginning inventory is whatever was left over at the end of the year, end of the prior year, that wasn't used to make pizza. So it's sitting in the restaurant there in inventory, available to be used this year to make pizza, and then that $80,000 will become part of the cost of goods sold. So we're starting out with $80,000, and we're going to say that during the year we purchased $300,000 worth of all those ingredients that I just mentioned, and they too will be part of cost of goods sold. Now the labor would be the salaries of all the employees that actually make the pizza, and we're going to say that is $180,000. So our total comes down to $560,000. But we need to subtract out the inventory at the end of the year. Obviously, the inventory at the end of the year wasn't used to make pizza, still sitting in the restaurant, and so we can't include that as part of our cost that was sold. So if we say that was $85,000, we'll come up with a cost of goods sold of $475,000. A couple other items on this form that we need to deal with are, how was this inventory valued? The easiest way to do that would be just to say it was valued at cost. In other words, just the cost of whatever the price was when it was purchased, and so we're going to check that box right there. A couple other items that don't really apply to this business are here, so we'll just check those no. Then we'll go back to the navigation page and get back to page one like that, and then we want to enter some other cost. On line 7, we'll start with the salaries of the officers. For example, the president of the company, let's say that he earned $85,000. Now we have some other salaries here. So these salaries would be people or employees that don't work on making the pizza, so their salary would not be part of cost of goods sold, but they might be people that work at the front desk that take orders, or maybe the people that the employees that deliver the pizza. And let's say that is $20,000. Then on line 11, we're going to enter some rent. We're going to make the assumption that the building that this business is in is rented. So let's say that was $60,000. And on line 16, we're going to have some advertising expense of $10,000. So we finish with a nice round number of ordinary business income on line 21 of $100,000. So that gives us a pretty good start for this tax return. Now let's go ahead and look at page 2 of 1120S. First question asks us to select a accounting method. Since we're using inventories, the appropriate method would be the accrual method. If it wasn't for that, we could probably use cash, but inventories require us to use accrual. And the business code came down for us from the first page that we entered, and then our product or services restaurant, so we typed that in. There's a series of questions here that really, most of them don't apply to this tax return, so I've gone ahead and checked them no. And let's go down here. You can see all these are no. But let's take a look at question 10, which says that if both of these conditions apply, then you're not required to file these schedules, Schedule L and Schedule M1. And the conditions are that the receipts for the year need to be less than $250,000, and the total assets also need to be less than $250,000. So we've done a little computation here, and as you know, the total receipts were $750,000. So that means this question has to be checked no, and that happens automatically for you because we know how much receipts we've got. So that means we're going to need to do Schedule L and Schedule M, and we'll do that just a little bit later. Let's scroll down a little bit further to page 3. So the ordinary income here of $100,000, you might remember on page 1, line 21, was $100,000, and that's come down for us right there. And we're going to say that this company has a bank account where they earn some interest, and we're going to say that they've got $2,000 of interest. So that's pretty much all we need to do for page 3. And page 4 is Schedule L. You remember we just said a minute ago that we were required to do this page 4 because of the fact that our receipts are more than $250,000. So let's go ahead and make up some numbers for our balance sheet here on page 4, Schedule L. And we'll say that we have a beginning cash balance of $70,000 using nice round numbers again, and inventories of, you remember from 1125A, our beginning inventory was $80,000. So that goes right here. So total assets are $150,000. And of course, liabilities and shareholder equity need to equal $150,000 to keep everything in balance. And so let's say that we have accounts payable of $90,000. And then we have capital stock of $10,000 on line 22, like that. And we have retained earnings of $50,000. Retained earnings is the income that the company has made in previous years. That's the beginning the balance at the beginning of the year is $50,000. And at the end of the year, we're going to say that they have had a good year, so they have $177,000 of cash at the end of the year, and they've got $85,000 of inventory at the end of the year. Again, that came from that 1125A. You remember that ending inventory number that we entered? That's the same number that we need here, $85,000. So we have $262,000 of assets at the end of the year. And accounts payable have increased a little bit, $200,000. And capital stock is usually going to still be the same in most cases. And retained earnings, again, they had a good year, so that's going to be $152,000, and that will equal the total assets. So everything is in balance. So we're moving right along here in good shape. Now scrolling down to the next page, page 5, we have our Schedule M1, and the income per books, that is $102,000. That's $100,000 of ordinary income plus the $2,000 of interest income that we earned. So that goes right there, and that number carries forward to line 4 and line 8. That's really all we need to do there. Now M2, the balance at the beginning of the year, that's the retained earnings that we entered on Schedule L at the beginning of the year, which was $50,000. And the ordinary income came down from page 1, line 21. And the other additions is the $2,000 of interest income. So we have $152,000 of $152,000 is our balance at the end of the year. Page 5 is the last page of 1120S, so we're done with our 1120S, but now we need to distribute our income, which is $102,000 to our shareholders. And for this purpose, we're going to assume that this company has 2 shareholders, and their shareholder agreement states that they share their profits 60% to the first shareholder and 40% to the second shareholder. So let's go back to our navigation page, and we have this thing called an allocation worksheet, which is a little worksheet we've created to help us to distribute that income to make the work a little bit easier. So let's go there, and here's the worksheet. So we've got K1 number 1, Sam Smith, K1 number 2, Eddie Jones. The first guy has 60% and the second guy has 40%. And here's the income that needs to be distributed to those guys. $100,000 of ordinary income and $2,000 of interest income. So we've entered the personal information up here, the Social Security number and the name and address, and we're going to allocate 60% here. So that's $60,000. 60% of $2,000 is $1,200, and we'll scroll down a little bit here, and 40%, $40,000 for Eddie, and $800 of interest. So now, how does that get to the Form K1, which is the actual government form that gets filed with a tax return? Well, let's go to K1, K1 number 1. Now, here's K1 number 1. This is the actual government form, which you can file with your tax return. We've got our navigation buttons on here, but other than that, it's the same form that you would send to the IRS. And you can see that a lot of the information, most of the information here that you need here came down from the page 1, the corporate ID, the name of the company, and this is the information that we entered on that allocation worksheet, the name, address, and ID, and the percentage of stock is 60%. And you can see that his ordinary business income, which we came from that worksheet, is $60,000, and interest income is $1,200. And if we scroll down to the second K1, we have pretty much the same thing, except he has $40,000 and he has $800 of interest income. So that's how those K1 forms work, and everything is on this allocation worksheet, which is pretty useful. Now there's another choice here that we could have made that I'd like to tell you about. Let's suppose that the shareholder agreement, instead of saying that the first shareholder gets 60% and the second shareholder gets 40%, let's say that it says that the first shareholder gets a fixed dollar amount of $80,000 and the second shareholder gets whatever's left over. So let's enter 80,000 here like that. And on shareholder number 2, he's going to have 20,000 instead of 40. Now let's go to the K1 and see what we have. Now we have 80, which is what we'd expect for the first shareholder, and 20 for the second shareholder, which is what we'd expect. So that's how that works. There's another navigation page here that you might find useful. To get there, click here, and you see we've got allocation worksheet 1 and allocation worksheet 2, and we've got a maximum of 6 K1s, or 6 shareholders, and you can click on that and go to there, or you can go back to the navigation page and go to the worksheet, whichever you want to do. Now, some people are going to have more than six shareholders, and what can we do about that? Well, there's a little bit of a workaround that requires a little bit more work, but it can be done. What you would do is you would save this form and then go out to your location where you saved it and make a copy of it. Then you could open up your copy and come back to this K1 number 1, and over here this little entry field, you enter a 7 like that. You see everything changed to 7. Now you've got K1 number 7, and if I click on him, I'm on K1 number 7. Of course, this is a different shareholder now, so I've got to change my personal information, and I got to change my shareholder ID. It's all different, and probably my allocation percentage is going to be different for this shareholder than it was for shareholder number 1. So that all would have to change, but it can be done, and it's a little bit inconvenient to have your information in 2 PDF files instead of just 1, but at least it provides you a way to do that if you need to. We're almost done, but let's talk about one other subject that is kind of important. And let's talk about this ordinary income of $100,000. We've already seen that it was distributed on Form K1, $60,000 to the first shareholder and $40,000 to the second. K1 is the form that the shareholder will use to report that information on his personal tax return, Form 1040. So the first shareholder will have $60,000 of income on 1040, and the second will have 40, which is all well and good. But the $100,000 presumably is still sitting in the corporate bank account earning interest, which is fine, but most likely these shareholders are going to want some of that money distributed to them. They're not going to want to leave it all in the corporate bank account. They want to use it for personal purposes themselves. So how do we do that, or at least how do we reflect that on this tax return? Let's go to the navigation page, and we'll start out by going to Schedule K, the shareholders' pro rata share of items, and we'll scroll down to line 16D, which is distributions. Let's suppose that these shareholders have decided to distribute to themselves $60,000 of the cash. They're going to leave $40,000 in the business to expand the business next year. Maybe they want to hire some new employees or something like that, but they want $60,000 distributed to themselves. So we put $60,000 on 16D of K1 or on K, but we need to also put that on the K1, and we need to go to the K1 number 1 and go down to 16D. We'll enter a D here, which is the correct code. Those codes are in the instructions for Schedule K1 on the IRS website. You can find the instructions. I just happen to know that the correct code is D. So shareholder number 1 is going to get $60,000, or 60% of $60,000, which is $36,000. And shareholder 2 is going to get 40%, which is $24,000. Just like that. Now, there's just a couple other things we need to do to finalize this tax return. So we've just taken $60,000 out of the bank account and distributed it to our shareholders. So we need to reflect that on the balance sheet. And let's go to the navigation page and go to the balance sheet and subtract $60,000 here. So it leaves us with 117, and then our total assets are 202, and that puts us out of balance. So we need to fix that. Let's go to back to our Schedule M2 on page 5, and we'll put our distribution here on line 7, $60,000, leaving us 92 at the end of the year, which is what we want. Take us back to our balance sheet, put in 92. Now we're back in balance. So that is what we want, and that is wraps up our tax return. But let me just mention one other thing here. Going back to the navigation page, you see this checkbox here. I've got the error messages turned off, and now that I'm done, it's going to be a really good idea to turn those back on and see if I get any errors. And you can see that I do. Total assets at the end of the year should be entered on page 1, item F. So let's go there and put in 202 right there. That takes care of our error messages. So that's a pretty good idea to do that, to turn your error messages off while you're making your entries. Otherwise, you'll probably go crazy looking at them, especially when you enter the balance sheet. It'll give you lots of error messages until you get their balance sheet all in balance. So turn it off, but at the end, turn it on to make sure that you've got everything fixed. And that is it. So thank you for listening.